Good morning. It is 8:30 UTC, Monday the 19th of August. Anyways, going through Bitcoin, we'll break down the weekend and then kind of look at a game plan for the week. Largely still a lot of indecision, just sideways generating liquidity on both sides. Just looking at some local stuff, just above 60K, 60.2. It's pretty decent, actually. Then again, we are still closer to the downside structure, which is a 57.4 and potentially all the way down to 57K if you're talking about that downside liquidity. A little bit higher time frame because we have been, pretty decently range bound for the last week. So I think looking at that liquidity, the fact that we built up quite a bit to the upside is actually promising. The things that still stick out to me are that if we do go lower back in a 57K, we don't want to lose the low here. That's the really important one. If you lose that, we're very likely to go to 55 and potentially sweep lower into that long liquidity that's left. The nice thing is that there's still a dead zone below us, which is still above structure. The dead zones are where we look at reversals potentially. I look at the long short just over the weekend. We saw some shorts coming in more effectively over the weekend to drive price down a little bit. Long just start to pick back up, so it's going to be pretty interesting to see if we hold the local level. We're really in a very low time frame, tight little squeeze here between the weekly open and the previous weekly, which we'll go through. Also, taking a gander at the Commitment Traders report from the CME. Saw quite a bit, even in pretty decent upside sideways. Actually, we saw quite a bit of asset managers adding long positions, whereas dealers were closing longs. So this is always an interesting one to see when they're actually continuing their allocations. But overall, I think it's positive. They're still very very heavily allocated long, even after the major flushes out that we saw in the last 2 weeks. So it's still positive. Looking over at economic events that we've got, we got European CPI coming in today, Eurozone CPI. The FOMC meeting minutes, that's going to be really interesting tomorrow evening, just because that's going to be pretty significant, maybe setting the tone for September. Jobless claims and stuff like that, that's all coming out on Thursday. And then Friday is Powell speaking. So we could be looking at a little bit of low volatility. At least low volume, that's at least the expectation. We'll see if we get high volatility, low volume. That'd be very interesting. But the more interesting stuff, again, like I said, Thursday, Friday, stuff starts to get more effective there. But for the most part, it's a pretty soft open on Monday this week. Looking over at trading light, just to look at some more advanced stuff. Open interest still pretty decent, still been climbing in this upside zone. A little bit of a flush out as we saw the nuke back down, but all of these shorts are still in place. So that's actually still positive for potential liquidity to the upside. So not a whole lot of liquidations. We haven't had a liquidation event really for the last 4 days since that major drive down that we saw. Looking at the heat map, I'll turn TPO off here. There's a little bit of local support, but outside of that, there's not a whole lot. There's some more stuff stacking at the lows, like 55K and whatnot, which would make sense if that's where we'd want to see some kind of holds. But just locally, not a whole lot. There's some stuff stacking higher if we do have a pop up to the upside to eventually hold price. So again, you're in a pretty flat squeeze here. The losing of the low here at, really tight 58.2, you could see a sweep back down towards the lows of 57K. So there's a couple nice plays, but not in the current little range. You want to see a localized gain to come back up and test the highs, or a localized failure. And until either of those two things happen, you're just in a nice tight little range that's just, taking out 100x liquidations, and that's pretty much it. Looking at the footprint, I'll go a little bit higher. It's a bit easier to read. All the major shorts are still in play here, so that's promising with the longs being taken out going back towards, what is that, the 16th? So overall, there's still long liquidity here that we can effectively take very well, but the shorts are still stacked to the upside, so all the shorts above us are still in position. I'd say any gains of 60K should see a really strong move back up to 61 just based off of that. With some local liquidity, obviously, if we do start breaking these lows, we got the delta slightly more bullish here. But again, all we really have to do is lose something really locally, like 58.2, right? Put these guys out of position, and then we'll start sweeping lower into the previous structure. But the shorts definitely still in place, and as we saw in the liquidation heat map, very much liquidity is going to be taken if we have a nice spike up. Anyways, going over to the plan here. So the local plan is very simple. You are in a tight little range, basically 58.7 to about 58.3, call it that. So that's it. That's the local stuff that there's no real reason. You've got local priority down since you failed and gone lower. However, there is still decent amount of liquidity. We've got resistance above us and whatnot. I would say that if we do start seeing a local loss at say 58.3, I want to see some retests lower, 57.5, 57K potentially. The loss of 57K is where we start talking about a big flush down to 55. And I am expecting, if we do have a breakdown, to have an initial bounce from the zone back to the upside. That being said, it's still, like I said, you're in a very ambiguous zone here. Some localized gain, say at the weekly open, that would be pretty significant. Like the previous weekly is right there, 58.7. Should see us a nice retest higher, 59.5. So if you're looking for something really clean here, just put 58.7 and 58.3 as your little alert levels and see if you get a breakout or a retest back up. If we do have a squeeze into this high structure, I will probably see an initial rejection, right? Create some higher lows potentially. However, the short liquidity that's up here at 60.3 is massive. So if we do come up here, there's a chance for a squeeze to the upside. Again, you want local gains of levels to enter positions, and you're taking profits, right? When you come back down, like if you break the lows, you want to see profit taking as you come to the downside. Same thing as if you gain here, right? This is not a place to like reverse your order directly. These are great zones to potentially take some profits on some longs if you've still got some in place. But the longer we stay in the zone, the longer we're kind of building that liquidity. The higher time frame liquidity is simple. If we start popping this high, we should be flying to about 65K, just because there is so much short liquidity in the market still. But this is a local dead zone. It's really tight little range. Wait for a breakdown or a break up. It's literally a $500 range from the daily open. So until that's changed, I don't see a real point to take a new position in this zone. Still largely ambiguous. I think breaking back below 57K definitely gives you a bigger downtrend to the lower time, the downside time frames, because you're technically still gained above that, above this previous low structure with what we've done, basically everything on the upside. And any gain here, that's breaking us out of this range high to then go higher. So until that happens, you are in this range. Play the range as it is, as you have been for the last 10 days or so since we've had the move up here, and really just wait for some direction. Don't force the trades here. And yeah, I think I'll leave it there. So take it easy and catch you tomorrow.